Well, good morning, everybody. My name is Ian Hawkins. I'm the head of content here at Swoop. Thanks to everybody for coming along. We have 315 people on the call today, and I am delighted to welcome you to our webinar on this week's budget and what it means for your business. Let's get some housekeeping done before we kick off. We really welcome questions today, but please, can you make sure you put them in the Q&A box? If you put them in regular chat, they are likely to be missed. So Q&A, that's where your questions need to be. And if you have a question, we really want to answer that question in the time that we have. The chat box is where you can drop us a message if you're having any technical difficulties whatsoever. I have colleagues sitting quietly in the background. If you have any problems at all, they will leap into action and make sure that we here are audible and visible once more. My experience of Zoom is if you come out of the meeting and then come back in again, that almost always solves your problem. In any case, this meeting is going to be recorded and posted on swoopfunding.com. If you want to watch it again or recommend us to a friend or colleague, that is where we will be. And our usual disclaimer, this website is for information purposes only. You should not consider anything we say as financial advice or an endorsement of a specific product or investment. Today, I am delighted to be joined by Andrea Reynolds, who is the CEO of Swoop. We have Ciaran Burke, who's the Chief Operating Officer at Swoop, and our special guest, Rachel Harris, founder of Accountant She, StriveX, and Building Strively. Rachel, how lovely to have you here. This is an exclusive. Yesterday, you interviewed the Prime Minister, you interviewed the Chancellor, and you talked to Ed Miliband. What was the mood in the room with those three?
Yeah, absolutely. Good morning, everybody. Happy Glastonbury week from me as an accountant. This is my one of two very busy weeks of the year. A really big part of what I do is advocating on behalf of accountants, small business owners, and just making sure that we collectively have a voice. As part of that, I have been able to interview Keir Starmer a few times now. This is the fourth time I've been able to have a one-to-one. I'd say I would describe this probably as the liveliest meeting I've ever had with him in terms of I really challenged myself before this meeting to make sure I get the most out of this opportunity and make sure that if this was the last time I ever had the opportunity to interview him, I could, go to sleep that night and be really proud of myself. And so I'd say from his perspective, it was probably a bad day to be chatting to a business owner who has just had dividend tax increase by 2%. So straight in, my opening question to Keir Starmer was, I listened to a Labour manifesto that pledged not to increase taxes for working people. I've just watched you increase dividend tax by 2%. Do you not consider me as a small business owner a working person? And things kind of heated up from there. So it was a lively chat. I think Labour have a lot to answer for when it comes to people who extract dividend, salary, rental income. I think, we were expecting it to be a wealth and stealth budget. That is absolutely what we saw. As usual, there was a pantomime before, during, and after with the OBR leak, the pantomime that is the Commons, and then everything that followed. And so I don't know about you guys, but I feel like it's going to be a restful weekend for me.
This should be restful, but do you think you're going to be invited back?
Yeah, as I left the room, the PM's assistant said, I haven't watched someone go in on him like that before. And so, again, the challenge to myself is the reason I do these things, like the reason I have been able to build the audience is to be that voice. And so, if I wasted an opportunity asking only questions that they had pre-approved and like only asking questions that felt comfortable, there's no point in like having this job. And so I hope to be invited back. I actually think that's one of the main reasons I work with creators is to make sure that we are bringing the questions from our audience. And yeah, my follow-up question was about, what's the incentive to remain in the UK? Because actually there are far greater incentives at the moment to build businesses in other places. So yeah, interesting.
Okay, thank you, Rachel. Well, that's one of the reasons why we're so pleased to have you with us today. And again, this is an exclusive or a Swoop exclusive because you haven't gone out to any PR yet. This is the first time you've talked about this. So on Wednesday, we found out the minimum wage is going up to 12.71 an hour. Full expensing is here to stay. There's no change on the VAT thresholds. And the big picture is Rachel Reeves has gone on a tax raid of £26 billion to pay for some more spending. That's the big picture. Andrea, what is the more nuanced version of that?
Yeah, firstly, Rachel, I think he probably was expecting a happy Rachel because clearly you've done good advocacy work on no anticipated tax impacts for limited partnerships. So that was a win for you, I would imagine. I would say let's just take a step back on the bigger picture here. I always feel like budgets are budgets, but it's actually what happens outside of the budget that truly matters to our pockets. And what we have to look at, first of all, how did the markets react to Rachel Reeves' budget? And the answer to that was a muted reaction, which is a good thing. So as soon as the markets are approving, any decline at all in gilt yields means slightly lower costs on mortgages and business loans, etc. So the good picture was they felt that it was a reasonable budget, no, nothing strategic, nothing grand, but at least reasonable. The second thing is what are the growth forecasts for the year? Because that's what matters. We have to start getting growth if we want to start seeing less tax rates. So they've slightly revised that up to 1.5%, but then unfortunately it flatlines. And then the third aspect of this is inflation. And we had a little bit of a good news story in terms of it slightly came down to three. They're expecting it to be 3.5% for this year and going into 2.5%. So bigger picture is at least the dynamics are moving to one, which Rachel Reeves loves, is the word stability. Um, I would say don't be blinded by the headlines. We're going to dig in here to, okay, you might have heard some bad headlines, but what's the actual devil in the detail here? There are some good news stories for businesses, depending on what sector you're in, etc. So we're going to delve into that, but I would say don't be entirely depressed. It was a mixed bag, but I did see some elements of strategy going on within this budget.
Yeah, just as before we came on the call, I felt that actually there were some really positive things that we were able to talk about. Um, Rachel, it might be early days for you yet, but what have been the early noises from your clients? Are they worried? Are they resigned? Are they furious? Are they shutting up shop? What's the story?
Yeah, I think the too long didn't read from my perspective as someone who, I don't know, I feel I speak for a lot of small business owners. And I think, yeah, the TLDR is this is a really good time to be investing, and it's a really good time to be systemizing as the owner of a business. And it's a bad time to be passive about your profit extraction strategy. And so uh, very few people are arguing with the welfare reforms. Lots of people are just challenging where that tax is coming from. I'd say a really good time to like drop your shoulders is really challenging, like Andrea said, the small print on lots of the changes that were announced on Wednesday actually don't come into play for 2 3 years. Again, I would imagine a lot of these we will never see come to fruition as part of a campaign for another general election. I say for business owners specifically, we do always see those tax changes happening first. And so obviously the dividend taxes are coming in from 2026. Minimum wage and living wage do come in much more time sensitively. And so points to action for limited company directors is to book in a bit of a financial MOT with your accountant to just have a profit extraction strategy, whether that is doubling down on utilizing the remaining allowances for the 25-26 year, and just having conversations about different schemes. But a lot of what we saw on Wednesday actually have a far longer rollout plan than we would normally expect to see at this point in the tax year.
Sure. So there's an element of just shifting around rather than losing out altogether. Kieran, is it all bad news, or are there any opportunities you've been able to spot?
Yeah, definitely some positives in there. Starting kind of from the macro. So a lot of kind of capital that comes into the UK market, either at a debt level, grant level, or equity level, it stems from the British Business Bank. So they've announced they're increasing their expenditure to the business bank from 2.5 billion to 3.5 billion. So where do you then feel that as a business owner? So we've seen lots of business owners, say on the lending side, take advantage of things like C-bills, recovery loan scheme, and now, as it's currently called, the growth guarantee scheme. Well, a key instrument for the growth guarantee scheme is that kind of guarantee which comes from that British Business Bank funded. So if there's more money coming in there, we'll see continuations of those schemes, which have proved very popular and highly impactful for businesses. The same is true on the equity landscape. So We see a lot of EIS and VCT funding happening. The nice thing about EIS and VCT funding is it has to happen in a cyclical cycle against the tax calendar. So that cash needs to be deployed annually, whereas a traditional VC has the choice to kind of hold and stay depending on markets, where with those tax schemes they go out. So more money into those schemes is definitely a good thing. And what we've also seen in the EIS and VCT schemes is actually, as a business, you can take on a lot more money. So on the EIS side of things, you were capped at being able to take in 12 million as an organization. That's now increased to 24 million. And if you're in a knowledge intensive industry, that means that those levels are up again. So you can take in 20 million as an organization in 1 year, or 40 million in its entirety. So again, welcome changes. One little thing in there, if you are the investor and you're investing directly, no direct changes if it's EIS in terms of getting your 30% back. But if your strategy is to spread your investment and elect to invest across a portfolio and use something like a VCT, you're only getting 20% back on your investment as opposed to 30%. I think the most positive thing for me, though, in terms of this distribution of capital is actually the resurgence of some grants. So it's felt a bit like the Sahara out there, very arid lands when it comes to grants over the last 12 months. Really disappointing to see the not returning of the smart grant system, which had become really, really popular for businesses because of its recurring nature, open kind of framework. But what we can see is some early wins coming through. So one grant that was very, very popular was the Women in Innovation Award grant. And we can see that coming back. That's now live. Applications open until February 4th. So women founded business in particular sectors, advanced manufacturing, digital and technology, and life sciences can get up to £75,000. So relatively quite broad across those sectors. So definitely a really big win for female founded businesses that can now kind of get access to those grants again. We've also seen kind of encouraging grants in different areas, so coastal and fisheries, again increasing that for kind of tourism, marine base, and again at a regional play, we've seen that both in terms of regions outside of London and the southeast, but also in devolved nations across Wales, Scotland, and Northern Ireland. So I think, yeah, just to sum up, seeing that kind of billion come through, we'll expect to see some gains across all of lending, equity, and grants.
And just to add to that,
Andrea.
there's no specific details yet, but you can see where the intent is going. Similar to what Ciaran was saying, once we left the European Union, a lot of regional funding actually completely disappeared. It used to be known as the ERDF funding, and it wasn't replaced. But in the announcement in the budget was moving towards more a devolved nature of grant funding. And so each region has been given specific funds. And within the lines of the budget, it said for business supports and skills development. So what that normally means is I'll be looking towards the combined authorities. These are the local growth hubs, the government representations to support businesses. I'll be looking specifically over the next few months now in terms of getting into the detail of what's been allocated and what's moving towards more grant funding for regional areas. So for me, that was a positive signal. I think what we're trying to see here is this is a government that is genuinely looking to see how they can help scale up businesses. And, the actual Department of Business and Trade has actually set up a scale up division within the department, specifically focused on helping the 44,000 scale up businesses. So what are they doing? They're looking at, as Ciaran said, improving access to capital so you don't have to go to the US. And the extension of that strategy that they're running there is not just looking at EIS and the grant funding, but also trying to encourage more to list on the London Stock Exchange. And again, there was another announcement there on where there'll be no stamp duty applied for the first 3 years of owning shares. So looking to reinvigorate the London Stock Exchange. So you can see some angles there of this government looking to bring back some growth capital into the market, which I think is a good thing. And I think we should also talk about the apprenticeship scheme, which I think, like, we're all business owners here. We're looking at, well, what are we going to change in our behaviour moving forward next year based on the announcements? And I think the apprenticeship scheme is one of them. So removing the 5% cost that SMEs had to contribute into the apprenticeship scheme for under 25s, that's now gone. And specifically alongside that, there was, I think it was 820 million package announced for those under 22 where there'll be paid placements. So there's aspects like that I think, let's go and start using them. So there's enough on the negative side. Let's try and eke out the positives from the budget as well.
Yeah, I mean, Andrea, you are always banging the drum and saying, let's not look at the big headlines because, if it bleeds, it leads. But let's look at the detail. And it's always in the detail that you can find other things that you can do. I mean, Labour's trying to avoid more austerity and they're trying to promote growth. Do you think broadly that's kind of what they're going to achieve with this?
I mean, I didn't listen to this budget as a business owner and go, yes, I can see how we're going to get to 3%, 4% economic growth. I just didn't see it. I saw pockets. I felt like this was more a budget to ease the concerns of Labour backbenchers and more towards welfare spending than I did towards we have a plan, we have a strategy for growth. Like, weirdly enough, I will have one negative to say. Like, there wasn't really any talk about AI. There was one mention of Brexit, and there wasn't really any talk about like reforms in terms of regulation. Maybe they'll come later. But I feel like if we're going to talk about growth, if I were them, I'd be announcing we're heading back into the customs union. But like, we're still waiting for those things. But there was too much spend in there. Like, this was a budget. The last time she had to come back to us and look for tax increases to fill a black hole, this time it was, well, actually, I'm choosing to spend more in welfare. And I think okay, why would I be okay with the tax increases? I would say increasing the financial headroom, which is what the markets look at, was a good thing to do. I think that's more prudent. But no, there wasn't austerity, but the austerity is coming in the form of freezing the income tax threshold. Look, we're all going to be hit by that. But as I say, let's focus on business and the impacts plus and minuses. I think, again, maybe let's focus on business rates relief and the reform of business rates. And Rachel, I don't know what your clients are thinking about that, but I would say that's a big one. Well, like, we've been all talking about business rate relief and reform for a number of years now. So not sure
Yes,
what
indeed.
you're hearing.
Rachel, what has been your takeaway about the business rates relief?
Yeah, absolutely. Again, echo everything that Andrea said in terms of, like, I think it's about picking the positives. I'd say specifically, obviously, as part of the wider work that we do with Swoop, actually, from a Swoop perspective, there's been so many positive changes to incentivizing capital investments. And so I feel like actually, like, that's where a lot of clients are paying lots of attention to. We've obviously got reforms for rates relief. And again, that's part of being a business owner that is unsexy, but actually lots of people will have seen that, acknowledged it in the small print, and actually got quite excited about like future planning as well as capital investments. Obviously, like AIA, the full expensing, the new 40% FYA. I feel like actually for a lot of people, this is probably a time to invest, and then again just have proper profit extraction strategy.
What about property and dividends? What's the news on that?
Yeah, for sure. So for anyone that isn't sure, personal tax on dividends, salary, and rental income is heading up between 2026 and 2029. Again, I mentioned earlier, obviously, I'd say stealth tax has been the buzzword of the last 12 months. Really important to specifically pay attention to when these things are coming into play. Dividends and living and minimum wage are the time sensitive ones for 2026, but between 2026 and 2029 we have got changes coming in to dividend, salary, and rental income. I'd say on a personal level, I think one of the biggest pivots required here from the government is around financial education. We saw some big changes in this budget that really do impact how the general public who try to dip their toe in investing through things like ISAs, cash ISAs, stocks and shares ISAs. We've seen some changes that actually would have a far greater impact if we were better financially educating the general public on what these changes mean. And the best way to create that change is through financial education. And so, as with anything, like, please do, we're here as a public service for you guys. Like, please do get your questions answered. I can see Angela has already submitted a question. So literally why we're here for you today.
Yeah, and we will be coming to those questions shortly. I just want to continue the conversation here a little bit longer. So there's no changes to full expenses or VAT. So it's sort of good news and not so good news. I mean, we've been pushing for a change to the VAT threshold for some time. Why do you think that VAT is stuck where it is?
Yeah, absolutely. And again, we've seen a lot of the tax rates stay where it is, even with corporation tax has temporarily become stable but still high. Again, we've got business rates, digital compliance costs are all creeping up. I think this was a budget delivered to the general public and not delivered for business owners. And I think very often they will use words like freezing because they think that pivots correctly to the general public. Most business owners understand that freezing is still an uplift. What have we've just pushed 1.7 million people into a higher rate tax bracket. And so again, delivering an autumn budget, they'll be delivering things that go down well a month before Christmas to the general public. Using words like frozen do that too.
Okay. Well, to quote my own accountant, and that's literally what he said the first thing when I talked to him yesterday. Do you think has this made life easier or more difficult for accountants, do you think?
That's a juicy question. And
Yeah.
someone's just put in the chat, do you think more people will now think about leaving the UK? And to be honest, I'd say in that aspect, it's become harder to be an accountant. I think as accountants, a really big part of the training that we go through is around ethics. It's around supporting the UK as an economy. It's about supporting it and actually really just feeling such a privilege to be part of the small business and business owner community. I'd say having a decent response to should I be considering tax incentives in other places? I'd say I am losing my ability to confidently answer that question whilst maintaining integrity as a business owner. And so I'd say my job as an accountant, it's not easier or harder. Like, spring budgets and autumn budgets have been happening for a very, very long time. But I think our ability to remain impartial politically gets harder and harder when I feel, manifestos have been broken, or we have a government that doesn't consider directors of limited companies to be working people, and that's the challenge.
Yeah, I agree. I want to bring back in Ciaran and Andrea at this point and just say, obviously, Swoop deals with people from every sector and businesses from every sector. Are there any clear winners or losers, do you think, in this budget? And it looks like, for example, landlords look like they're getting squeezed, but what's been your
Yeah. I mean, there's a few kind of niche ones maybe to pick up on. I think there's some good wins if you're in film production. There's more kind of like a 40% business rights relief for those guys for the next 10 years. Retail are probably getting more kind of relief than the other kind of, or hospitality. So I think they estimated it's about 750,000 businesses that fall into this category. But if you're below kind of a 500,000 threshold, you'll get 75% on relief on business rates. So again, it's really focusing in on that. If you're on the high street, I mean, you could argue, are you just continuing to try and put plasters on a changing high street, and maybe things do need to change. But certainly if you're in that area of retail, hospitality, and leisure, that there's definitely benefits for you. And again, like ever, anything that's kind of green gets a lot of business rates. So if you're a hotel and you're thinking of putting in EV chargers, definitely incentivization around those kind of plays. Again, if you're I know Andrea was on there's not too much in AI, and there really isn't, but things there's like some light things in around training. They haven't obviously put into the specifics, but you should be able to get access to kind of more training or cost towards tooling in those areas. I know that's quite broad, but for me that was kind of generally the stuff. I suppose if you're in the gambling industry, not so hot for you. So increases there, and people might say, okay, well, so what? Like there's only a handful that make a huge amount of profits, but you also have to think of the ecosystems that they may support and the venues that are built up in around them as well. So it always is good to think about it as a wider ecosystem as well. So yeah, certainly in the gambling industries, they're getting hit a lot more, and also the ones that kind of do it from an online perspective in particular. So yeah, I think from a sector perspective, they're the ones that popped up from my side.
I should point out, by the way, that Ciaran is on a calling in from Denmark today, and there's a problem with his Wi-Fi. So though we can hear him, we can't actually see him move. It's not that he's taken up ventriloquism.
Oh,
Your picture's frozen.
apologies, guys. Yeah, all right. Let me try reboot.
I've heard a lot about CGT, and we immediately think of property when we hear about CGT. But obviously, businesses have big assets as well. Who else is going to be affected? What does the changes in CGT mean for business owners? Andrea?
I would say, well, look, I'm a founder of a business, and I'll let Rachel speak into other owners. But like one of the speculation, I would say one of the biggest speculations around this budget was, would there be what was called an exit tax should founders of businesses? One of the questions is, should we all be leaving the UK? Well, one of the big scares that was out there was that there would be a capital gains tax applied to the value of your business, the notional value of your business, if it had gained value while you were a resident here. That was actually spooking a lot of people to leave before the budget announcements for fear of that. But that was not announced in the budget. And I would say from a tech or sort of a founder of a fast growth business perspective, that was good news. And I'll let Rachel speak into the rest, but just to say, just on your point of, I think fundamentally, if I were Labour right now, I think fundamentally what they're missing from a business owner's perspective is there's no sentiment is a big part of an economy. Sentiment is a big part of business confidence and consumer confidence. And I feel like they're ruining the vibe. There's no let's be honest, vibes are important. We can see people get elected based on the vibe of the country, and these guys need to start changing the vibe. They need to start coming out and saying, we will reward risk, we will reward risk takers, and start changing the actual narrative. And between here and the next budget, start really impacting on, we're focused on growth and we're focused on business. And then I think that's what for me is missing from this Labour government. And I think that's a reflection of, there are no business owners in the cabinet. There's one tenuous link to being a startup business owner. So I feel like they're missing the psychology of what it takes to be a business owner. As Rachel said, don't you consider us workers? And so I think there's just a fundamental shift that needs to happen in the narrative first, and before they're even applying some of their strategies. Rachel, I'm not sure what you think about that.
Yeah,
Rachel, you've met Keir. Is he the boring but competent that he promised, or does he need to have a little bit of a more risk-taking edge?
Yeah, I think a big part of like budget day for me on Wednesday was a bit of a press tour. So I did lots of like BBC London, LBC, and actually one of the main points that I had as a business owner was, not only have you increased dividend tax rates, but like as a business owner, I have a team. I have people that depend on me, look up to me, and actually have to work within an organization where I set the rules. And as the business grows, as the business changes, things that I set out to do a year ago maybe are different now for things that I didn't know then. And so why, as a voter, as a member of the public, do I have to watch a British government who encounters all of the same changes, landscape changes, law changes? We've just watched them go through like COVID and Brexit. We do understand all of this, but there has to be some acknowledgement Because when I have to translate changes or policy changes to my team, I have to stand as a human. I have to explain why. I have to give the reasons. And I can do all of those things whilst maintaining integrity, maintaining trust from my team, and whilst also giving them job security. How do we operate within a landscape where we actually can't expect the same from the government? Just a little bit of integrity, some acknowledgement for what we said in a manifesto 18 months ago maybe is different now. One of the questions as well, just in the chat, Miss Barr asked just for a little bit of context. So when we're talking around freezing rates, they asked why is freezing tax rates actually seen as pushing people into the higher rate tax band, which is a great question. And again, something that wouldn't be covered in speeches or lots of the news. So when we are freezing tax thresholds, not freezing the rates, that means that people's income rises with inflation. I, as an employer, have to give people inflationary pay rises, which means that actually when I have to increase salaries, but the tax thresholds remain the same, it means that more of their earnings quietly get pulled into higher tax rates, even though the tax rates haven't changed. So it's basically like a sneaky tax rise that happens automatically. But again, that's where a lot of the burden shifts back to business owners to have to actually explain to the team, we are giving you a pay rise, but you are going to see less of it for these reasons.
Yes, indeed. Okay, and to Andrea's point about the vibe, do you agree? Do you think that it is about the vibe, and are they just getting it a bit wrong? That was just a silent nod. Sorry, I'm looking at the wrong bit of my screen. You're just nodding. Ciaran, we seem to have you back here, and I'm going to go to some of the questions that we've had come in. So Angela has said, we have an approved EMI share scheme in the business. Can you translate this into numpty for someone who doesn't understand anything in this space, please? Now, who's going to be volunteer to translate EMI
I'm happy to
shares?
take that one.
Yeah, go for it, Rachel.
Yeah. Forgive me, I'm not an EMI specialist, but I have gotten very nerdy with the announcement on Wednesday. So the government has created something called, I'm pronouncing it PISCES. It's the Private Intermittent Securities and Capital Exchange System. I would describe it like a mini stock exchange for private businesses. So up until now, if your business wasn't listed on the London Stock Exchange, your staff couldn't easily sell their shares, and they basically had to wait until you sold the business or it merged or floated, which for lots of small business owners isn't the plan. This PISCES has changed that, so it actually lets private companies have controlled windows where employees and investors can buy and sell shares legally, safely, without the need to become a public company. So that was part of the announcement on Wednesday, and how that links into the EMI scheme and the CSOP is if you've ever used the EMI scheme or CSOP, you'll know that they are ways to reward staff with share options. They give the team the right to buy and sell shares at set prices in the future. Normally, employees can only exercise those options, i.e. actually buy and sell their shares, when the company is sold, it lists on the stock exchange, or another specific event happens that you preset. Before now, this PISCES wasn't one of those events, but it didn't exist when the rules were written. So even though this PISCES now allows the private share trading, employees with these EMI options couldn't legally use that window to sell their shares. And so what's changing is the government is basically fixing that by saying we will now allow EMI and CSOP contracts to be changed so that these PISCES trade now counts as an exercisable event. The TLDR on this is we can now create a bit of a mini stock exchange for private companies, which is a huge, great change for small and scaling businesses who have, key members of staff that they want to incentivize, they want to reward, who have previously felt like EMI and CSOP have been a little bit fixed or a bit solid.
Thanks, Angela. Yeah, Ciaran.
Just another thing within that is probably worth highlighting, and it kind of goes back to what we were saying. There does seem to be some shoots in there in terms of a strategy around scale-ups and trying to invest in scale-ups, and we kind of see that in the EMI scheme as well. So previously, you would be capped at being able to have the EMI scheme or set up the EMI scheme if you had 250 employees. So that's now doubled to 500. And the amount of unexercised options you can hold has also doubled from 3 million to 6 million. So that's kind of directly trying to target those high growth businesses that have kind of gone over that 250 marker. So I think you can kind of see some very real examples that like live in the market now. So we would have seen a lot of headlines recently with Revolut getting a 75 billion valuation. Well, a lot of their employees have massively benefited because they would have started early days and being able to have those stock options. But say they didn't do it at the very beginning, at a point in their growth, they probably would have been able to do it at a later stage. And then to Rachel's point about this kind of wider infrastructure, Revolut's obviously very lucky in that they've obviously done this hyper growth and there's lots of funds that are interested to go and buy employee shares. So they were one of the unique ones who were able to dispose of it. But actually with this new infrastructure, you have a whole plethora of other businesses that will be able to do that. And we can also see the kind of wider industry being able to support that as well, because you've got platforms like Robinhood, which is a very popular stock trading platform, actually came out earlier this year on one of their investor calls to let the market know that they were going to open up their platform to private companies. So the infrastructure will also be there from very popular applications to allow this to happen as well. So it is a pretty exciting change, I would say, for employees of businesses that are on growth trajectories.
Yeah, and Ciaran, just on the last point on the EMI scheme, another key part of it, as Ciaran mentioned, they're now moving this scheme and expanding it out to scale ups. So it used to be that the gross asset value of your company was capped at 30 million. So it was really essentially a scheme set up for startup businesses who were trying to attract talent in, but your gross value had to be below 30. They've now increased that significantly to 120 million. So what it's saying is, here's an instrument now that you can go and attract talent and get all the benefits of the EMI scheme for your employees. So again, I think if you take that plus the EIS announcements plus the stamp duty relief on trading shares, there is this shift towards supporting growth businesses in the UK.
Okay, that does seem to be there lots of incentives to invest rather than to do look for equity investment rather than for borrowing. Good. We have some more questions here, and you can use the Q&A box if you have anything to ask our panel. So Esther says, as a startup in pre-revenue stage, this has got your favorite letters in it, Andrea, R and D. As a startup in pre-revenue stage, I've been spending a lot on R&D, which sadly is tougher to reclaim from. I, for the first time, feel discouraged and feel it is time to write off over $500,000 invested and simply quit on the $1 trillion market we are working on. Is there anything in the budget that would have me relook at where I am and consider alternatives? So,
well, first of all, don't be discouraged. There was no changes to R&D tax relief in the budget. However, there have been in previous budgets. So look, let me just give you the reality of the landscape. Swoop actually processes R&D claims for our clients. So please contact us. And look, at the end of the day, what was happening was there was a course correction by HMRC and by government because there was a lot of let's say, very shady R&D claims being submitted. And so what they had to do was take a step back, put in a new team and say, no, we are not going to accept R&D claims that are not legitimate technical challenges and legitimate innovation. So that's okay, because if you are legitimately investing in that, it's still a scheme that's eligible to you. They also, one of the positives is, especially if you're building something and you're now allowed include your cloud software costs, which previously weren't. So look, it has got tougher. Trust me, we know, we can see the challenges coming through. But actually, if you've legitimately carried out some technical innovations, then contact us and we'll help you through. If you're a pre-revenue startup business, you also, one of the best schemes in the UK is a startup loan that's available to all pre-revenue businesses if you're trading under 3 years, and you can get up to £25,000 per promoter or founder in the business. So that's how Swoop started. And we did the patchwork quilt, I call it, of startup funding, of your startup loan, your R&D tax credit refund, your SEIS, EIS. It's not pretty, but it's absolutely possible. And I would say, in fairness, the UK has one of the best startup founding ecosystems when it comes to finance than you'll find anywhere else in the world. So don't be disheartened. It is more challenging, but contact us and we'll get you through it.
I
Thank you
think
very
just
much.
one thing, just a really caveat for a pre-revenue business thinking about R&D, you really want, and I can understand why you really want to think about it in the context of the UK. So the prior schemes did allow you to get some tax back on investments you were making in technical engineering, say, and maybe use an agency outside of the UK. That's no longer the case. So if you are pre-revenue, be very careful as to whether it's yourself doing the engineering, the science, the process development, or if you're outsourcing or resourcing it. If you want to use the R&D scheme, very much think UK first.
Thank you. Rachel, have you got anything to add to that? I see you nodding all the way through.
Yeah, I'm going to get whiplash from nodding so much. Yeah, I completely agree. I think I echo specifically what Andrea said around, from a client perspective, really a lot of the changes that we have seen to R&D are to actually just make sure that claims are genuinely R&D, which, as an accountant who used to have to tell clients quite frequently, I know you think this is innovation. It is not innovation. It doesn't qualify. In terms of the actual boundaries, we've been quite happy to see a lot of that brought in. And so again, if it's genuine R&D, a lot of the changes that have happened haven't been negative.
There were a lot of fly-by-night outfits that set up and said we can get you your R&D claims because they knew nobody was looking, and then suddenly HMRC did start looking, and all of these companies disappeared overnight. Okay, got a couple more questions that have come in. One or two on the chat. If you can get them in the Q&A box, that's helpful because it's interesting one from Niraj, who says, between this budget and the previous, do you think the government is actually making it more difficult to hire more staff? Yeah.
Yes.
Yeah, I do.
Simple answer to that. Like
Yeah.
big one, the last one's the national insurance is just you directly impact the increasing living wages, obviously will directly impact. So yeah, it's a blunt answer. It's more expensive.
Okay. It is.
And
Yes,
I would
so
also say we were all trying to help our employees by using salary sacrifice scheme. And that is, oh, do you want to increase your pension contributions? Do you want to get your cycle to work, your EV car, etc. They are highly beneficial schemes for your employees. Now, one of the things we talked about here is there was an announcement about salary sacrifice where, your pension contributions without an NI applied to it is now capped at £2,000. And that's significant. However, it's not coming into force until April 2029. So if you're reading those bad headlines, know that it's not coming until April 2029. But what will that do? Well, we'll all be thinking, well, we know it's coming, so let's prepare now for not hiring as many people. And quite honestly, I think everyone's doing that now. So as Ciaran said, blunt answer is yes.
Yeah.
Yes.
And again, it comes back to the financial education piece as well, when we're tweaking with schemes like salary sacrifice that are actually, as an employer, are very lucky. Most of my employees are accountants who do understand it, but like having worked in industry as well, where you are translating these words that people see on their pay slips to really get them to engage in the finances, even in certain industries, getting people to opt into private pension schemes is quite difficult. When we're then tweaking it without financial education around what these changes mean, it's just going to increase the fear around opting into any of these schemes as well.
Well, as you've mentioned, the pensions, Julie Spence has been in touch, and she says, with the increase to state pensions, has there been any clarity around state pension increase, and if this will then be taxed above the personal allowance threshold of £12,570? Will individuals with a state pension now be required to complete a tax return?
I'm very happy to answer that one. Hi, Julie.
Go for it, Rachel.
So the state pension is treated like any other normal income. It's not tax-free income. Most people don't usually pay tax on it because it intentionally stays below the tax-free personal allowance, which is currently £12,570. The government has now increased the state pension again, which is thanks to the triple lock. For anyone that doesn't know, the triple lock means that state pension increases every year by whichever is highest, either wages, inflation, or 2.5%. So as a result of that, we have seen state pension increase again. This is good for pensioners. It's helping them to keep up with increased costs of living, even being able to switch their heating on. But it also means that some people's pension will now start to creep above the 12,570 allowance. What that then means is that if your total income, so state pension plus any private pension saving interest or like part-time work again, goes over 12,570, then that extra bit is taxable. And so, yes, even though the pension increase does feel like a bonus, it might nudge some people into paying a bit of tax for the first time. For most pensioners, they won't automatically then have to do a tax return. It's only if the combined income goes above. But even then, HMRC have been working on the new simple self-assessment, which will, like, pensioners are the ideal target market for that. A simple self-assessment is where you're not self-employed. You just need to summarize all of your taxes in one place. But it's worth saying for this, we are talking about a relatively small group of people who are just over that threshold and haven't got any other income that HMRC could adjust.
Okay. There's one here from JJ. Question to everyone here: If you knew beforehand what you now understand about the current financial challenges, would you have structured your business differently, or would you have made different business decisions, or would you have chosen to start one? I can answer that one. No, everyone would have still chosen to start one. But would you have structured things differently or made different decisions? And
I'll start.
Andrea, champion at the bit.
Yeah, chomping at the bit, because it's important, again, for the government to know. We all have choices. We just, as small businesses, as easy. We've restructured. We structure ourselves to be a global business. So we have offices in Dublin, UK, South Africa, US, etc. But here's the thing: I say this to everyone.
Actually,
Can
sorry,
you hear me now?
You're back. You're back.
Oh, I was just saying, here's the thing: as a business, and especially if you're a business that's looking to raise capital, you should be thinking about what other markets, what other countries are welcoming of startups and scale-ups, and use the system that they have. So we have the benefit of the Irish system as well as the UK system. Everywhere you go, you should be thinking about, oh, if I'm going to hire someone in wherever, Paris, what are the grants and the system there that's available to me? So we've absolutely made decisions. We are doing more R&D in Ireland now than we used to do, because the system has significantly improved for us there versus it's become more punitive in the UK. So make your decisions. You're an agile small business, you can make those decisions, especially if you're in tech or digital services. So don't just see your world as confined to the UK. We've raised money in 3 different countries. That's how you should look at your business moving forward. You're global.
Ciaran, you're nodding away. Anything to add?
Yeah, I think you've such a luxury when you're starting out your business for the first time, because you can really box smart. Because as Andrea said, every market has their pros and cons. And while there be obviously lots of frustration things in budgets in the UK, there are lots of great things. So we touched on the startup loan scheme. So I would always be championing that if I was starting a business. Like, how fantastic being able to get access up to 25,000 a flat rate of 6% spread across 5 years. Wonderful. Let's go. Let's build an MVP. Let's do a production order. Very easy. As I said, you've got a load of cash being funneled in at a regional level. Well, why would I set my business up in London? Why not look at like the Northern Paris hedge funds, the Midlands Engine Investment Fund? I'm going to get some more chance of getting investment if I set up here, or if I'm in a certain sector, which country or which region is going to champion that sector. So just being really, really smart about those decisions. Again, we touched on the R&D side of things. So if I'm investing in engineering and science, and I do decide UK is my country, then I'm going to weigh the pros and cons of maybe outsourcing to another region versus doing it internally and do those calculations. But I do think, yeah, starting a business is a fantastic thing in general, but that luxury of thinking about what's my business, what's my sector, who are the employees I'm going to have, and then mapping it out either at a country or a regional level is super important because you can massively win by looking at what the schemes are out there.
Yeah, and people work remotely anyway, so what's the difference of where you plop your office? And it might make a big difference. Rachel.
Yeah, I think we interestingly have actually always approached it differently in that I do feel like part of the training and qualification process for accountants is really deeply about supporting the British economy, and within an industry specifically that chooses to outsource a lot of their workload to other countries, we have actually always chosen to employ grassroots British, like on payroll in-house accountants, and it like that's always been a values piece. But again, like with every budget, it does get harder. It does, as someone that wants to work really hard to employ a diverse team, whether that is even for career changes, career pivoters, but I'm now only being incentivized to employ apprentices under 25. Like it becomes really hard and really challenging. Our job as business owners very rarely becomes the job that we set out to do, and actually becomes much more around strategically pivoting and adjusting to these challenges. And so we've always chosen to have a UK based team from a values perspective. I want to be creating community and economy in the country that I was born and raised. And so our job now is pivoting to understand how do we do that whilst also trying to encourage working parents to upskill themselves and do chartered qualifications when there is zero funding to do that. And that's part of a um, wider business strategy that feels hard.
Yes, indeed. We're into our last 10 minutes. So I've got a quick question from Mark here, which is I have concerns about the proposed treatment of image rights payments as employment income from 2027. Do you envisage this applying across the board or being implemented with thresholds and exemptions? In the face of ever rising tour costs, this feels like a real kick in the teeth for music artists navigating the cash gaps between touring and recording cycles. Uh, does anybody want to speak to that about um, how image rights payments will be regarded as
I can
employment income?
speak generally about it. This is
Okay.
a very specific niche
Very
question.
niche.
But for anyone that doesn't know, on Wednesday in the T's and C's, there was no announcement in the Commons because it is very niche, but there was some small legislation changes that basically said that from April 2027, image rights payments, which generally apply to people like footballers or artists, um, the change basically said image rights payments that arise in the context of employment must be taxed as employment income and therefore be charged income tax, employer and employee national insurance. I think that specifically the question was, do you envisage this applying across the board or implemented with exemptions? And actually, lots of advisors widely are not expecting there to be any exemptions. The reason for that is this is not being announced as a change. It's actually being announced as a clarification to stop people from putting through these payments without charging insurance and national insurance and income tax. So generally the government's motivation behind announcing that was to root out any avoidance schemes, make sure that high value individuals or employers, especially when we're talking about footballers, musicians, can't disguise remuneration
Hmm.
as image rights royalties to avoid PAYE and national insurance. So the short answer is no, we're not envisaging any thresholds or exemptions. This was not an announcement. It was actually more clarification to stop any like national insurance avoidance schemes.
Well, as a man whose face is his fortune, that's bad news for me. Okay, one really last quick question here. Actually, it's a bit more general, this, and it is this. As a startup business, what is the best way to employ staff if the government keeps making it more difficult? What about things like the apprenticeship scheme? Is that more tax efficient? And are there other ways to hire without feeling the tax burn? Is there
Yeah,
any way around it?
I
Kieran?
think that, well, the headline one on the apprenticeship scheme is if you're employing an apprentice under 25, you can do it for free as an SME as opposed to
Mhm.
paying the 5% levy. So that's a clear yes on that front. I think the prior budgets have also really emphasized apprenticeships across both sets of governments. So again, that's kind of where you're being driven to, as Rachel was saying, where the drivers are there. So like the driver is like, we'd really like you to go and get some apprentices, and we'll put funding against that. The downsides, as we touched on earlier, it's more expensive than ever to hire an employee with the increased NI. So that's not changing. The other one to be aware of that again came in previous budgets, but often where business owners would look to kind of save on the top line was maybe hire people as contractors or freelancers. But if you continually hire that person over a prolonged period of time and that's their single occupancy, that is not legal. So again, that kind of loophole, so to speak, was very much kind of cut out in previous budgets. So to answer your question directly, apprenticeships is really the way that you will be able to take advantage in terms of if you're looking to increase head count in a cost efficient manner.
Okay, well, we're really up to time now, so I'm just going to quickly go around our panel and see if anyone's got a big TLDR about the budget as a whole. Anything that you particularly want to take away? Rachel, I guess we'll start with you.
Of course. I'd say this budget didn't shock lots of people, but actually we're going to see the changes seeping through for a long time to come. Rachel Reeves is redistributing quietly. She is helping families, she's helping low earners whilst taxing wealth and through stealth taxes. I think specifically for business owners, we are being brought new challenges that feel stronger, harsher, and more difficult to find the, what's the word I'm looking for? Like the silver lining. For most of us, again, as I said at the beginning, this is about having really strong profit extraction strategies. And I've seen a question multiple times in the chat, which was, where can we watch the grilling that you gave Starmer? That'll be posted across socials this afternoon. I'm just waiting for approval on the video from Downing Street. So across socials this afternoon, you guys can interrogate Keir Starmer on whether or not he considers business owners to be working people, considering he promised not to increase taxes for working people, and then increase dividend tax, as well as asking what Labour's response is to people asking, is there any incentive not to move to a tax haven?
The temptation to just click send now is being resisted. Okay, Rachel, thank you. Andrea, what's your TLDR?
I wish this government would just grow a pair and just focus on growth. And the fastest and quickest way to focus on growth is to actually go and negotiate a re-entry into the customs union. I'm not talking about entering Europe as a whole, but they need to do something radical. And this budget was far from radical, far from radical. Business and the economy needs growth. So where are we getting it from? And it's only going to be making decisions like that are going to actually help us as business owners. 16,000 businesses have stopped exporting to Europe since Brexit. Guess where our growth has gone, guys? Like, it's time for them. This budget was a myth, really, let's be honest, for business. There was no strategy. There was no real good vibe, as I say. So the only thing I can say is you've got plenty of time. You're with the European leaders a lot these days. Why don't you go put us back into the customs union? HM Treasury are actually have open consultations at the moment for businesses to submit their thoughts, etc. I would encourage everyone to submit their thoughts to HM Treasury. Just Google the email address and submit what it is that you think this country needs to get growth back into the economy.
Yeah, lovely. Thanks, Andrea. Sorry to cut you off. I want to give Ciaran 30 seconds.
Double down what Andrea said. I'd probably go a bit stronger, like just get yourself back into Europe, like sort it out, and like calm down on the spending side of things. Let's just focus on growth. But like quick nuggets on like positives. If you're a female founded business like we are, make sure you get your grant in there. £75,000, great to see it back. So please go and do that. And then, as Rachel says, do your calculations, particularly around dividend tax, property tax, because they're the ones that are coming in. My gut feel is like anything that's 29, 28, they're probably just putting in there and they'll go, hey, look, we're not going to do it anymore. So I'd really focus on the immediate ones, do your calculations on that, get your grant application in, and then let's hope this government shows a bit of ambition sometime soon.
So basically max out on everything you possibly can max out on. And indeed, we have maxed out on the number of people on this call. We've got nearly 400 people on this call, and it's delightful to have so many business owners joining us today to hear from Ciaran Burke, Andrea Reynolds, and everybody's new favourite, Rachel Harris. So thanks very much indeed for joining me this afternoon, and I wish you a happy rest of the day wherever you are. Thanks for watching, everybody. Bye-bye.
Thanks,
Thanks so
everyone.
much, Ian.